All right, good afternoon, everybody, and thank you for joining us. My name is Patrick Dunawilla. I'm the editor of the Chart Report, and this is, of course, Chart Request Live. We don't have Steve joining us today. He's traveling, so you got me today, but make sure you guys drop your tickers in the chat, and we'll be sure to break them down. And then you can always email us your tickers, and we always give priority to those who email us. You can send those requests to questions at stockmarketmedia.com, and we'll be sure to get to them. If we don't get to them this next one, then we'll be sure to get to it the next time. But anyway, Wavy, what's up? How you doing? Thank you for joining us. What do you got today? Give us some good tickers. I want to start with H-Chan. He's got Toll. These home builders have been under a little bit of pressure. They were one of the strongest industry groups to start the year. I mean, thinking back on like Q2, it was pretty much semiconductors and home builders. Those were the two strongest industry groups. And, you know, those are pretty economically sensitive industry groups. So seeing those two as the leaders, I mean, that was one piece of evidence kind of suggesting that maybe the market was going to move higher in those, in spring, summer. But let's get back to Toll Brothers here. Looks pretty good. I mean, so it broke out, like I was saying, in the spring around May, like nice year and a half base right here. With these base breakout setups, I always like to draw the Fibonacci from, the height of the base, basically. You measure starting from the peak and end at the trough here. And then you look for that 1618, that first Fibonacci here. That's around $95. So I think this one has a lot of upside, and so far it's behaving really well. You know, you got about 12% pop, maybe 11.5% on that breakout. And then it pulled back, retested the breakout, let some people back on the train, and then here we are pressing up against those new highs, not too far away from printing all-time highs again. You're about 3%. You know, it's one good day away. So H-Chan, Toll Brothers looks awesome, totally intact. And let's just look at the whole home building industry group right here. Similar action right here. You got the breakout, retest, and here we are. Successfully holding those former highs here. So that's a good look there. MLM, Martin Marietta. Okay. This one, little bit of a different story. So you also had a nice base breakout in the spring, similar to what you saw on Toll Brothers there. But this breakout, you did get, initial little bit of follow through. Something's going on here. I mean, it just could not get past this 460 level here. And here we are kind of really struggling at those former highs. I wouldn't call this necessarily a failed breakdown yet. I think you still need to see a little more decisive of a drop. I'd be comfortable calling it that if we broke down below these August lows here. So far, it's just kind of, I guess you could call this a retest still. But not great action. You know, you want to see on those retests, you want to see a nice bounce, right? Like a bouncy ball. I think it was Mark Minervini once said, pullbacks and retests allow you to see if your stock is an egg or a tennis ball. You know, is it going to just boom, hit the ground and just crack or is it going to bounce, rebound, like we saw with Toll Brothers? This one kind of acting like more like an egg right now. But Wavy, let's get to some of yours. You said Macy's. Okay. Short Macy's to the COVID lows. Boy. All right. So, yeah, Wavy, I mean, there's not much bullish things to say about this chart. I mean, it's just been a mess for years too. I mean, the past 20 years, just complete trendless mess here. I mean, there's other pockets of strength out there. I'm not sure I'd want to short it necessarily. Um, I think it's just kind of a mess. It's just kind of range bound. I think you're probably better off short than you are long, but uh, yeah, this one total mess. All right, Abdur has NDM, and then we're gonna get to some of those pot stocks that James has there. But I'm sorry, NNDM. Let's see this one. Nano Dimensions. I've never heard of this ticker. So it is industrial machinery, producer manufacturing. Okay, so it's an industrial. Kind of a cheaper penny stock. Not much to like about this one. If I really had to trade it, gun to my head, I would probably look at this level right here, this 217. You can see it's kind of acted as an inflection point a few times. It's even within the last year, you've seen kind of three tests there, and it just kind of refused to break down. But just even though on those successful tests, it just hasn't really been able to bounce higher. So not much to say about this one on the bullish side. But let's take a look at some of those pot stocks that James mentioned. He's of course talking about the marijuana ETF MSOS. And I've actually been talking with a few people, asking them, which marijuana ETF they prefer, because there's a few. There's MJ, there's MSOS, this one, and I think this one has a lot more foreign cannabis plays, more Canadian stocks in there and stuff like that. Whereas MJ is a lot of US ones, but also some Canadians. So I'm not sure what the main difference is. I know MSOS is bigger in terms of AUM, but both are fairly liquid. So both kind of decent vehicles if you want to play that here. But this is kind of interesting. Pot stocks are a joke. They've done nothing but go down pretty much since their existence. And there was so much hype for them, but it's just been, no pun intended, just a slow burn. And just, we've seen these like starts before where you see this like pockets of strength and then it just rolls over. But this is really interesting. And another thing is, I mentioned they've become a joke, and usually the best moves happen when nobody wants to even call it. Even us chartists that are seeing bullish momentum divergence right down here and a failed breakdown below those spring lows. Even then, it's even a textbook bullish setup. It's kind of hard when something is just in a downtrend and it's been trending lower for years, pretty much since its existence. But from a sentiment perspective, I guess that's what you want to see. I'm not sure if this is just one of those short-lived moves or not. I think it's still a little early, but let's take a look at MJ. Yeah, you're working on that second week. This one is out of the downtrend, and these things could really squeeze. I mean, I'm not sure it'll get all the way back to 8. That's quite a move, but you got to imagine a lot of people are short these stocks. I mean, take a look at Tilray here. This is one of the largest in MJ. Not sure if it's in MSOS or not. Kind of a lame week so far. Started higher and then given some of it back, but really strong week the week before. 27% gain last week. And that wasn't even its best in a while, because a few weeks before that, it went up 35%. And it's all starting with this failed breakdown below the 2020 lows. So if it's above 3, and we're talking about Tilray here, if it's above 3, it could really squeeze here. Again, pot stocks, they've been a heartbreaking trade, but the nice thing about a setup like this is your risk is really easily defined. So if you're wrong, you have a line in the sand where it's clear you're wrong, you can move on. Doing chart report all by yourself. Yeah, Rachel, I am. Hope to see you at Future Proof next week. I'm really excited for that. H-Chan, is your office in Little Italy? No, it's actually right downtown in San Diego here. If you're ever in the area, make sure you get a hold of us. Just DM us and we'll give you a tour of the place. I'm actually at home today, but we usually work from there. But okay, let's keep some of these tickers coming. Let's get some ideas going here. Someone mentioned Apple here. Had a pretty rough day yesterday. Another one today. This 3.5% drop for Apple. That's pretty brutal. I think it was the third worst day of the year, and here we are getting back below those. You know, last week in a few of our reports to premium members, we were talking about how good it was that Apple had reclaimed its former highs like this, but it just hasn't been able to hold. These last 2 days have been very brutal for the largest stock in the world. So we'll see how this resolves, but not the best look here for Apple. You know, kind of trying to get back to those August lows and this gap lower. And what's really interesting here with Apple is this was the earnings gap right here from August 3rd. And it just couldn't, that's where the resistance was, you know, that pocket of people who got caught off guard. You know, maybe they were hoping that Apple would beat earnings, and then all of a sudden the thing goes from near all-time highs and gaps down like that. I forget how much it dropped on earnings. Looks like 4.5, almost 5% on earnings. So there's probably a lot of people just hoping and hoping and hoping that it gets back to that level. And when it finally does, when they're finally break even again or close to it, they hit the sell button, and you're seeing that reaction there. Pull up the 200-day on Apple, please. I absolutely will. But with Apple, it's really the 200-week. You know, that's I always joke with my friend Shane Murphy. One time he posted a chart of Apple with the 200-week moving average like this, and he got thousands of likes on Twitter. And I told him it was the easiest layup chart you could possibly post. But it's been really interesting. I mean, every time Apple's gotten to its 200-week over the years, here's 2008. You can see it's been a generational buying opportunity. Here again, 2013, 2016, 2019, and didn't quite get there last year. Got kind of close, but anyway, the 200-day, here we are, right down here, 165. Doesn't really, I mean, you got these highs right here. Doesn't really coincide with much other support. I mean, it's rising, so if we get there if we take our time to get there, the 200-day might be a little higher by then. But PJ wants to see Blackstone, BX. A lot of these capital market stocks, a lot of these private equity stocks have been being mentioned a lot. This is a really interesting one. This looks like a stock that is in the process of reversing its downtrend. So you had the downtrend here, very well defined, numerous touches on that trend line. A lot of people give trend lines crap. I know Steve and JC, they like their horizontal levels. And I do think horizontal levels, without a doubt, carry more weight than diagonal trend lines. But it does still tell you a lot. I like them. Anyway, so you got the breakout of that downtrend line in June, earlier this summer. And it's been working higher. A little bit of weakness that we saw in August with the broader market. But this is a nice little 1 month base you got here, month and a half base. And it's kind of coinciding with those former highs, the November and August of last year's highs. So right around 108, 109, call it. Oh yeah, that is the level right there. If we can get above that, I mean, look how many times that has acted as an inflection point over the years. So if it's above 110, I think that's your line to watch. And then you want to start seeing that level act as support. You know, it's been resistance since last year a couple different times. So you want to see a breakout, start acting as support. But overall, this is what a stock reversing its downtrend tends to look like. You know, you got this little base forming, and the momentum slowly picks up as it completes that base. It's been kind of a slow grind higher, but I like this one. I like this one a lot, PJ. PE firms are making a ton of money right now, and they're stepping and doing deals, regionals and commercials. Yeah, I mean, the whole capital markets ETF, I forget what it was, but if you look at JC and Steve's work, they've been talking about it a lot lately. Pretty good looking one. What else we got? Any you guys watching any commodity stocks lately? Those have been getting a lot of interest. We uranium's been a Oh, thank you, Joe. I love it when Pat charts. Um, Uranium has been a hot one lately. Right here, you can see kind of been range bound the last 2-ish years, but we're getting above that 24 level here. It's been a resistance so many times in the past year. If we're above that, I think you want to look towards the former highs here, $30. And some of the biggest components in that CCJ, I'm sure some of you guys have seen that one. That one's just continuing to grind higher here. Just kind of a slow and steady march higher like that, but behaving really well. And that group seems to be looking good. A lot of interest there. MPLX. Let's take a look at that one. Okay. Wow. Looks like it just kind of fell asleep here. What is this one? Oil and gas. Okay. Yeah. I mean, as tight as that range has been, you got a pretty clear level here to lean on, which is nice. Right around 35 here. And I also like one of my favorite patterns is these ascending triangle patterns because there's a lot of psychology behind these patterns. And basically what it's showing is you have horizontal resistance here, right? So every time you have sellers, every time price gets up there, sellers start hitting it. But then you have a rising trend line support. And that's telling you that on each rejection, the buyers are getting a little bit more aggressive or sellers aren't getting as aggressive to the downside. So that's kind of bullish action, bullish information in its own. I really like those patterns like that, and it's getting really tight. So, I started off this chart saying it's fallen asleep, but it might wake up pretty soon. And you zoom out a little further, gets above 40, then the party could really get going. But let's check out rig. Yeah, I haven't checked out rig in a minute. All right. So, yeah, you got the shelf right here of former resistance now because we just broke out above it not too long ago. I'll put around $6-7. If we're above that, I'd call it what, 750. I think that's maybe the line you want to play here. If it's above that, I think you want to look towards like 14. I mean, wow, that's pretty good. Not too bad. I mean, those energy stocks have just been great. KCE, what is yeah. KCE Electronics? All right. So this one, you had those September lows or October lows right around here. You had a little bit of a failed breakdown earlier in the spring here. You got this nice bullish momentum divergence while you were hitting those new lows. And then we got right back above it there. So that's been nice. But yeah, it's still got, we talked about that basing process and how it kind of slowly gains momentum as it builds the base. And I think it's kind of in that stage where it's just starting to break its downtrend first. So it might need a little bit of time, but I think the path of least resistance probably is higher. In terms of upside, I think you want to watch this gap here, right around 54. That could be some resistance. We looked at that gap in Apple earlier and kind of what happened there. So maybe you get a pop up to that gap, and if you're long, if you're short term, maybe take some profits there, wait for a little bit of pullback to get back involved. But it's behaving pretty decently, not too bad. How about SLG, REITs? So REITs have become kind of a contrarian topic, but price action just hasn't been that impressive for the group. Now this one looks a little bit better than REITs in general, like the whole group here kind of broke out of that trend line here. Now you're kind of getting a retest here, breaking out again. Looks like year to date highs almost. Yeah, not quite, but getting pretty close. Multi-month highs. I think you do have this little gap here, but ultimately, yeah. I mean, I think these former highs could definitely be a little bit of a problem in the short term, and you also have here. Let me draw them. You also have those former lows, so this could be an inflection point here. This 45 level might be a decent place to take some of those profits, or even before in that gap. But it's behaving decently here. Maybe this is the right shoulder. Maybe that's the left head, or this is the left shoulder, the head, and then maybe that's the right. We'll see. It hasn't quite completed yet. Maybe we're seeing things that aren't quite there, but it's decent. Yeah. or ARRY. Array Technologies. You can see I already have some of these marked up. We go through a lot of tickers here, so uh, I've already got my drawings on here. Some of them are old. And little tip, I kind of like keeping my drawings on my charts for a while because it's amazing how these levels come into play. We talk about how there's price memory, and that's why we're watching these levels, and they tend to come into play over and over again. So right here, you have it. Array's just been stuck in a range for the past year, pretty much since August last year, just very well-defined range between about 25 or 24 and 25 and about $16 here. We'll drop it down to a daily here. You can see broke out of the range, but here we are trying to hold it here. Looks like we opened below it today, but we're kind of pushing higher, filling that gap. The whole market kind of under pressure today. I mean, we looked at Apple and that gap down there. That's pretty bad. Apple is, I think it's 7% of the S&P. It's probably even bigger in the NASDAQ, but not a great look there. We can look at Microsoft too. No, not too bad, but also not too great either. I mean, we really can't get too excited until it's back above that breakout level there. So that's something to watch with these mega caps right now, is a lot of them just kind of struggling to reclaim their breakouts or hold them. So tech. All right, let's check out tech. Don't Go Live wants to see tech. Tech resources. Kind of messy here. You've got the former highs right here. You had this kind of failed move here, and now former support, or what should have acted as support, is acting as resistance again. So kind of hard here. It's kind of similar to what we were talking about with those mega caps. You want to see it reclaim the breakout and kind of reemerge from that base. And it's kind of sketchy looking as long as it's below those former highs. Yeah, you could kind of draw your trend line here. Okay, maybe it's holding here. Maybe this was a fake breakdown of that. But like I said, you want to see it get above the former highs there, 45, 46. DPRT. That is Copart. Oh boy, is that a Head and Shoulders I see? Possibly. So you got that little Head and Shoulders type action over here, left shoulder, the head, right. And we can draw the neckline right here, right at 43-ish. So if that is the right shoulder, and this pattern is not complete, and patterns can also fail, and those tend to be some of the best moves, is when patterns fail like that. A lot of the times you'll see a little breakdown here, and then I'll rip higher like that when those patterns do fail, because everyone's caught off guard like that. But anyway, If it breaks that 43 level, I think it would make a lot of sense to retest that base here. And that makes a lot of sense because if you look at a measured move, and that's how you tend to get targets for a lot of these chart patterns, you draw the height of the pattern. So we can do that real quick here. I'm in magnet mode here, so it's a little tricky. We're gonna just eyeball it here a little. I'm not being too precise. And you never want to bet on things going to the penny exactly. That's a little silly, but that would make sense, right? A measured move. It's about the height of the pattern would get you back to the former highs there. I mean, before this little pattern here, this is a beautiful base breakout here. You can see it peaked in November 2021, along with a lot of stocks. Broke out this spring. Yeah, we have this, but like I said, it could end up being, we could end up kind of breaking down here. The pattern fails and then we rip higher, or we get the measured move, a nice healthy retest. That's totally fine. But that pattern is definitely a little ominous and something you want to keep an eye on there. All right. James wants to see ENPH. Enphase. All right. Let's start off with a weekly on this one. You can see I already got my fibs here. Kind of hit that back in 2020 and then went a little higher, but kind of the trend kind of stalled out. You can see it kind of started consolidating. This has just been kind of a mess. Yeah, you've gotten higher highs, but just marginally. And it's even though you got those higher highs, you've had to sit through some pretty uncomfortable drawdowns there. And here we are below that key Fibonacci level there. So not great, but also, I could see this thing just kind of continuing to consolidate for even longer. If it ever does resolve higher, I don't know if that's right. Yeah, that doesn't seem right to me. Maybe it is. I guess it is because that's a massive, massive move. $18 to 65 cents. Wow. This thing has just been incredible. Kind of all started with this failed breakdown here, right? Some of the best moves tend to start with those failed breakdowns way back in, what was that? 2016. Yeah, 2016. You broke down below those like post IPO lows in 2012. And you traded there for a while. I mean, that's September to, yeah, basically a year you spent below here. So I don't know if you want to call that a failed breakout or not, but this thing has been acting technically well. I mean, when it finally did break out in 2019, retest, went straight to the fib, and then just kind of flatlined, consolidated for the past, oh man, almost 3 years now, 2.5. But yeah, I think what you're watching for on this one, you want to see a breakout above those former highs. If it does, then you can kind of look for the trend to kind of resume here. Short report on PDD. What? Let's take a look at that one. That is Pinduoduo, right? One of these Chinese stocks. So had a very, very strong week last week, up almost 30%. Seeing it come down a little bit, but I don't know much about that short report. I'd have to look at it further. But hey, I mean, they couldn't even get it to fill the gap on that short report. If I was short, I wouldn't be too happy with, even though it's down 5% today, I wouldn't be too thrilled with that. On a short report, you want to see it really, really hit the tape hard, but so far you got a little hammer candle forming here. So maybe buyers are stepping in. And it's holding those former highs decently here. Definitely one to keep an eye on. It's definitely not the most bullish either, because at the same time it couldn't get above these January highs here. So I think if you're long this one, that's the level to watch in the near term to the upside. This call it 104 to 107-ish level, I think. Oh yeah, it's even bigger than that. 102 to 107. Okay. Pretty thick level, but yeah, you want to see it get above there, above 107. It could really get going, in the mid 100s. But this is a nice little base that's formed over the past year, or basically year to date since January. Nice little base here. Yeah, it's being rejected, but I think you want to see how it does on this rejection. If that dip gets bought, then there's information in that tells you that there's some demand here. But I like that it is holding this gap here. Um, but yeah, I'm going to take a look at that a little bit more. Thanks for that one, Wavy. SQ, let's take a look at that one. How are we doing on time? Oh, we're running a little bit over. Uh, Sorry, what a mess. So this one just can't seem to get it off the ground. And this looks like this whole action right here. That reminds me of the Russell 2000. I mean, that thing's tried to stand up so many times and it just keeps getting smacked down. But I think this one, as ugly as this chart kind of can be, I think the nice thing about it is you have some pretty clear levels here. Pretty easily defined range right here. For the past over a year now, you've basically 90s have been resistance, or even mid 80s. I know those are kind of big levels I drew there, and then mid 50s acting as support. So just kind of pinballing between those. If we break down, I think you got to look for the COVID lows. Again, we talked about measured moves. That looks about the same as what you'd get. So I think a resolution would probably get you to those COVID lows around $33. Not great, but if we find support again here, if that holds, you want to be looking towards the mid 80s, actually mid 80s for resistance. And then if that breaks out, I'd probably be looking at around these March 2022 highs around 140, 150. That's but again, it's kind of acting heavy here. Can't seem to really get off the ground here. So definitely one to keep an eye on here. And a lot of those ARC stocks, they were looking good a few weeks ago, but they've kind of had a rough start. The base building process, and that's really what 2023 has been. It's just been a base building process, and it's messy and frustrating for a lot of these stocks that got killed last year. But patience is key here. ILMN. We're gonna look at one more just because. Thank you for that one, Chewy. That's a San Diego-based company. ILMN. I'm gonna guess it's a biotech because biotech is huge down here. Big biotech hub down here. Illumina. Oh yeah, I should have known that. Here we go. This level right here. Call it 175-ish, 180. So that was pretty important support that it just broke here. And you're seeing that former support starting to act as resistance. We'll go back into that daily here. You can see couldn't even get through there on the rebound here. Looks like I had some news here. I'll have to look at that a little bit more, but yeah, I think if you're bullish, if you're long, you want to see it get above 180 again, kind of reclaim that, and that would be actually very bullish if it does that, because that's a fail breakdown, bull trap, or a bear trap if you want to call it that. That could probably get you to the top end of this range at least if it does reclaim that level, and that's a decent move. Let's be a little conservative here, call it 233. So let's say it does get above that 180 level. That's a decent size move there. Hold on. Yeah, about 25% move up to that. That's not bad there. Nice. But so far, I mean, you can't bet on that yet. As long as it's below that 175, 180 for former support there, now resistance, that's tough. And you can see it's just been trending lower for quite a while here, double topped here, and then just boom. So Wish I could end on a more bullish note, but thank you guys so much. You guys are the best audience ever. I love all these tickers. Love joining you guys and taking a look at all these charts. So I think JC and Steve will be there. Actually, we do have a conference next week, so I'm not sure. So stay tuned. But if you guys have any tickers that you guys want us to take a look at next week, be sure to email them at questions@stockmarketmedia.com, and we'll be sure to get to them. Thank you guys so much. You guys are the best. We'll talk soon.